But now it's time to reveal the hidden. The Soviet Files, House on the Embankment, on RT.
More news today. Violence has once again flared up.
These are the images the world has been seeing from the streets of Canada.
Giant corporations rule the day.
Welcome back to CrossTalk. I'm Peter Lavelle. To remind you, we're discussing if high oil prices endanger the fragile recovery. But before, let's see what Russians think about their economic prospects.
Oil prices, how high is high? Many now believe an oil price beyond $100 a barrel is not unrealistic. Economists are worried that fragile world economic recovery could be put at risk. The public opinion agency Levada Center asked Russians when they think the economic situation in their country will improve. 31% predict improvements within a 5-year period. 18% see them in the next 3-4 years. 14% within 2 years. However, the spike of oil prices may derail the global recovery and is putting upward pressure on food prices because the cost of transporting and processing crops has risen sharply. Peter?
Okay, Angus, before we went to the break, we were talking about speculation. You wanted to jump in at the very end there. Go ahead now.
Yes, I mean, I suppose the word speculation paints a picture of some sort of crazed individuals making hundreds of trades every day and making a profit on that basis. But I think there's a wider picture here, which is that a lot of commodity prices are very strong. Exactly. If you look at some of the foodstuffs, for instance, corn and wheat and sugar and some of the metals and so on. So that there's generally a commodity bull market, which is certainly fueled by speculation, but there's an element of fashion in investment, and commodities are fashionable right now. US interest rates are zero. If you keep your money in cash, you're almost guaranteed a loss. So there's every incentive to put it somewhere, and commodities are a thing that's in fashion. So whether that's what people normally think of as speculation or not, I don't know, but I think that's an important element.
Okay, I think that's a very good point. Tyson, it was brought up earlier in the program, and again, maybe to be a little bit of a contrarian here, is that if we look at the developing world that are doing quite well relative to the developed world, I mean, aren't they taking more of these commodities now? And that's helped driving the price because they have recovered, or recovered relatively in this economic turn down. And, they're saying, the Chinese, we need more oil, we need more metals, we need more grain, and this helps push up the prices too, because they're just keep going on their way. I mean, the U.S. may or may not have a currency war with the Chinese, but the Chinese are continuing to develop internal infrastructure and whatnot. So, I mean, what my point is that we could have just kind of a disparity of economic development in the developing world and the developed world. And that's where a lot of demand is in the developing world, because they got their house in order.
Well, I think that there's a double-edged sword for a lot of emerging economies in the developing world with higher commodity prices. While they benefit from some higher commodity prices, possibly in the agricultural sector, they're going to have other inputs in the energy sector that are going to drag them down. And we don't really have global free trade markets in agriculture, and so you're not really seeing their ability to cash in on those higher agricultural commodity prices to the extent that oil or energy exporting nations are. So I don't see uniform positive news for the developing world with sustained higher commodity prices, and I do see a lot of big investment vehicles in the United States and elsewhere, as Angus said, using commodities as an investment tool. It's more attractive than equities and other investments, and so and I don't think that's a positive impact, especially with the fragile sense of the global economy and the U.S. economy.
Well, I mean, Gail, to be kind of a contrarian, this is just market forces. I mean, just get used to it, live with it, huh? I mean, it seems to be kind of a vicious circle here because, I mean, if it's good for investment, good for speculation, et cetera, I mean, it's not keeping the common interest of the fragile recovery that everyone's talking about. And again, I'm really speaking about the Eurozone and the United States here. I mean, how do we balance the two, and how do we get oil back where it should be?
Well, I'm not sure I see a way of getting it back. I think with respect to food, I think there really is a real shortage issue. That we're talking about smaller reserves being carried over. Admittedly, some of this, it's higher demand because people have higher incomes and they can afford to eat more meat, and the more meat takes more grain. But trying to get the oil price back down again, it's not something that's easily changed, I don't see.
What do you think about that, Angus? I mean, we're in this $100 environment. Would you see it steadily going down, and why would it go down? Would there be some kind of fundamental news that we would have to take into account, structural changes in the world economy? I mean, what would drive it the other direction beyond another recession?
A sharp slowdown in the emerging economies is the thing that will cause it, I think. There's always a risk that you have Middle East tension that could cause a massive spike in the short term. So, we could see a number of these movements during the year. But I think, the key issue for me, in a sense, with my sort of particular interest in clean energy is that high oil prices will actually contribute to diversification of the world energy mix. They'll make governments and populations think about their choices on energy, and they'll also be directly good news for the biofuel sector, for instance, in terms of the finished fuel price, as long as that keeps ahead of the feedstock prices. And also, if the oil price pulls the gas price up, which I expect at least that differential to narrow between the two, then that's also good news for other types of electricity that compete with gas-fired generation, and that means wind power, solar power, and so on. So I think there are big ramifications for all those sectors this year, depending on what happens to the oil price.
Okay, Tyson, if I can go to you, I don't know your position on what we've just heard here, but can the world, or should the world, be balancing the recovery, high oil prices, and looking for alternative energy? Can we do all three simultaneously?
Well, I mean, we have to. In a carbon-constrained future, we're going to have to move into low and no carbon energy sources, and that's where the lack of a global binding agreement to deal with greenhouse gas emissions is inhibiting these investments. The United States domestically has not been able to get it together in terms of legislative action and coherent regulatory policy. But when it comes to energy, you've got two different sets. You've got the electricity sector and the transportation sector. And the electricity sector, I do see a path forward. The sustained low natural gas prices, as Angus pointed out, have so far not been chasing oil upwards. And so that sustained relatively low prices for natural gas have been very beneficial. We've seen a lot of switching from coal-fired power plants into natural gas in the United States. But the transportation sector has a lot of challenges. And we've got infrastructure in both countries like the United States and in China where it's not that easy to get off of the oil addiction. And you're going to have to complement high prices with some sort of regulatory approach to really have an effective transition to cleaner, more efficient transportation sector.
Gail, there's a lot of people that don't really want to go in that direction. Obviously, the oil companies are doing, $100 a barrel. That's great news. Great news for shareholders, too. I mean, there's a huge vested interest there that is very quite happy with the status quo. And I was even reading something before this program that a few people they're in the investment community, they're saying, I think it's going to go to 110. And that goes back to what we heard earlier, these projections. Now the next benchmark is 110. Get us ready for it, okay? And I don't want to cast aspersions on anyone, but the oil industry certainly has an interest in having people say such things.
Well, I think the advantage in high oil prices is that's really the only way you get the really high-cost oil that we need to expand oil production out. You have to have a very high oil price to go to the high-cost areas. And people look at all of these resources we supposedly have, but a lot of these resources are really high-cost resources. You know, there have been estimates that say, oh, they'll be economic at $40 a barrel, and then they say they'll be economic at $60 a barrel, and then at $80 a barrel. I'm thinking things like the oil shale and such things. But what happens is that, you know, if you have high oil prices, it theoretically should give you more oil production. So that's the one upside that I can see from higher oil prices.
Okay, and I'd like to ask all three of you the same question here. If we were doing this program exactly 1 year from now, what do you think the oil price would be? And I know there's a lot of volatility out there, but I'm going to put you on this one. Tyson, I'm going to go to first with you. What's 2011 going to hold for oil prices? Go ahead, just your crystal ball, you know, brush it off.
Well, hopefully it'll end with prices around $75 or $80 a barrel. That's where the supply-demand fundamentals, I think, dictate it should be, and hopefully that's where it is. I think that even for oil exporting nations, they'll be better off in the long term with prices closer to the $75, $80 range.
Angus, what do you think about, you know, what's your crystal ball tell you? Dust it off.
Well, my crystal ball isn't primarily to do with oil prices. It's more to do with clean energy, but I suspect that we could see a higher oil price in the short term and a lower one by the end of the year. But I think what we will see is a great deal more focus on different types of energy. We saw record investment in clean energy last year of $243 billion on our estimates, and lots of countries that weren't previously associated with clean energy in the Middle East and in Africa and Russia and so on are looking more closely at whether there are things they can do on wind and solar. The economics are improving, price of hardware is coming down. So I think it'll be a good year for clean energy, whatever happens to the oil price. But I suspect on oil we'll see higher and lower. Okay,
Gail, you got 15 seconds. What do you think? What's your crystal ball tell you 1 year from now?
Well, I think we'll see higher than lower, but I think what we'll see is a lot of recession. And so the recession may bring the oil price down to 80, say, but it's really the recession that will dominate.
Okay, that's not a very optimistic note to end on. Many thanks to my guests today in Washington, London, and Atlanta, and thanks to our viewers for watching us here at RT. See you next time, and remember, CrossTalk rules.